When refinancing a mortgage, many people focus solely on how much they're saving on their interest and monthly payments. A major, often overlooked part of the refinancing process is paying closing costs. Just like when you first bought your home, closing costs are an important factor to consider when taking out a new loan.
Refinance closing costs are fees that you pay when you refinance on your home. These fees are paid when you close on your new loan and can run from about 2 to 6% of your loan amount, or about $5,000, though the total amount can vary.
Your lender may also offer no closing costs refinancing, when your closing costs are either added onto the principal balance of your new loan, or the lender increases the interest rate of your loan in exchange for not paying closing costs. This allows you to save on immediate out-of-pocket expenses, though keep in mind you may pay more in interest in the long run.
It's important to know what your closing costs are so that you can be prepared. Closing costs can translate into a decent chunk of change, so getting these costs as low as possible will be important.
What types of closing costs will you have to pay when refinancing? Prepayment penalties. Some mortgage lenders may charge a fee when you repay your original mortgage early, such as when you refinance. While some lenders explicitly do not have prepayment penalties, it is something to be aware of when refinancing your mortgage.
Loan origination fees. These are administrative fees that your mortgage lender charges.
Appraisal fees. When you refinance, your lender will need to complete another appraisal to be sure your home's value hasn't changed significantly since you purchased it.
Credit report fees. Because you're taking out a new loan, your credit profile will need to be examined.
Title insurance. The title shows ownership of a property. Although the title is closely examined during the buying and refinancing process, things sometimes get overlooked. Since refinancing means taking out a new loan, you'll need new title insurance to cover it. However, some title insurance providers provide discounts to repeat customers who purchased coverage when they first bought their home.
Prepaid interest. When taking out a new mortgage, you'll typically have to pay in advance for any loan interest between the closing date and the last day of that month.
Escrow. This is an account the lender might establish to hold reserves to pay your insurance and taxes. If you are refinancing with your current lender, then your old escrow account will generally stay in place. However, if you're refinancing with a new lender, then they will usually require a few months' worth of property taxes upfront for the new escrow account.
Private mortgage insurance. If the new mortgage amount is more than 80% of the home's value, you may need to pay private mortgage insurance, or PMI for short, which helps protect the lender against losses if you can't repay your home loan.
Mortgage points. These are also known as discount points, which lower your loan's interest rate in exchange for an upfront fee.
So how do you know what your closing costs will be? If you're taking out a mortgage, your lender is required by law to provide a loan estimate within a few days after you apply for the loan. This disclosure includes the interest rate, the loan amount, and the estimated closing costs. Read this document carefully and ask your lender any questions that you have if there's anything that you don't understand.
At least 3 days before closing on your home, you'll receive a closing disclosure listing your final costs. Be sure to compare your closing disclosure to the loan estimate you received when you applied for your loan, and take note of any differences. If there's anything you don't understand, make sure to ask your lender.
Once you've reviewed the closing disclosure, check with your closing agent about how to pay these closing costs. Usually you'll be asked to pay using a certified check or a cashier's check at closing. Alternatively, you might be able to send a wire transfer prior to closing.
Some lenders might give you a special credit or allowance towards closing costs. This will help you save on closing costs, so make sure to ask your lender about any incentives or credits they might be able to give you. Keep in mind that these credits may be in exchange for a higher interest rate, so make sure to double check before going forward.
If you're considering refinancing your home, you now have a better idea of what to expect when it comes to closing costs. Thanks for watching.